Good afternoon again. I'd like again to welcome everybody to the next GreenWave call, and I'd like to introduce Michael Jennings, who will start off our call. If you have any questions, please don't hesitate to, you should be able to see a chat box or a question and answer box on the bottom of your screen. Please fill that in at any time, and the guys will try to accommodate those questions as we go through the call.
Thank you very much, Manita. Thank you, everybody, for joining the call. What I'm going to do is I'm just going to give everyone a quick overview of our current operations and strategic thinking over the next several quarters. And that will speak directly to a lot of the questions that people have about current operations, product offerings, and expansion plans, et cetera. So that being said, with our, as everyone has seen over our last couple quarters of results, that with our current operations, the company is in a great position to continue to incrementally grow revenue and profit over the next several quarters by continuing to do what we're doing. And I've broken that down into 4 categories to give you our kind of a basic thinking on what that looks like. So first, continuing to optimize production at our current cultivation infrastructure. Second, by expanding our current brand and product offerings. Third, monetizing our nursery infrastructure through our project with Green Venus, formerly in Trexon. And finally, by monetizing our extraction facility, which we've been working on for quite some time. So I'm just going to go through kind of those 4 categories really quickly. So regarding our current cultivation facility, obviously we're already producing top of the market artisanal grade product. We're hitting our metrics as per the original model, calling for 2 pounds per light of production, of flower production. But what we continue to do kind of on a daily, weekly, monthly, quarterly basis is through process and technology improvements, continuing to increase production, quality, and overall objective metrics by not only, like I said, improvement of process and technology, but also through the continued search for more exotic and high-performing genetics called pheno hunting. So that's a continuing process that we're doing at our facility. And now that we've achieved kind of the model basis for operational efficiency and production, we're just continuing to grow that. Second, as I mentioned, developing and releasing consumer product goods in categories outside of the indoor premium flower category, such as pre-rolls, dabbable extracts, vape cartridges, and edibles. Those 4 downstream products from flower kind of comprise a bulk of the market. So we've already developed and produced our pre-roll line and just introduced them to the market. We should be starting to see what sales are going to look like over the next quarter, and we'll be able to start issuing some guidance on what that's going to look like market-wise moving forward. Dabbable extracts we've already developed and had in production. It only represents a small fraction of our current sales, as we really haven't pushed that to the market. We're waiting for our other products to get in and be fully developed and ready to launch before we really go to market. But we believe that the dabbable extract segment could represent, ultimately 10 to 15% of our overall revenue once that's at full force. Finally, the 2 products that I've been working on developing over the last several months that are ready for launch in September are vape cartridges and edibles. In those particular categories, in the vape category, I produced and developed a sauce based cartridge. All of the objective tests and lab tests and field tests have come back extremely positive. The hardware is solid, the packaging is solid, the product is solid. So although I won't provide any specific guidance on numbers, we expect that to be a major category for us moving forward. Edibles, over the last several months, I've developed a gummy product in the edible category. That's the gummy segment of the edible market is the largest segment of that particular category, which is why I focused on that initially. To differentiate, what I've done is 99% of the gummies available on the market, or any edible for that matter, are distillate based, which is a non-full spectrum distilled THC product. Well, what I've done is I've based our gummy product on a full spectrum CO2 oil. So it's not only vegan and gluten-free, but the underlying cannabinoids, you get the full spectrum entourage effect in the same 100 milligrams. So it's a huge differentiator. And again, all of our market tests, objective lab tests and field tests have come back positive. And although I won't go into specific numbers, again, we anticipate that to be a major category for us in the edible segment. So third, as I discussed, is monetizing our nursery infrastructure through our project with Green Venus. Now, we've been working on this project for over a year. We're working with the Botticelli tissue culture-based clones. We recently completed our first garden trial comparing standard clones versus Botticelli tissue culture-based clones, and we've achieved equivalent performance, meaning we're ready to go to market in preparation in Q4. In preparation for that, we've expanded our labor force in the lab on site, aiming for a Q4 launch. And right now, we're still developing the capacity limits for our current lab, which we will be able to start giving guidance on as we get closer to the market date. Now, again, with that product, all of our demand surveys have shown strong sales potential to both retail outlets, commercial cultivators, and white label brands. We have groups that are committing to long-term purchase agreements to secure clean quality genetics of particular cultivars. And that's exactly what the underlying model is about. So we anticipate this being a strong revenue driver in starting in Q4 2020. We'll see what that looks like, and then I anticipate strong growth in Q1 and 2 of 2020-21 as we scale that capacity. Finally, monetizing our extraction facility. As some of you know, we've been working with the local utility supplier, Pacific Gas and Electric, for over a year to upgrade our electric infrastructure in order to get our extraction facility online. That has finally been achieved. We actually are connected to the grid, and we are in the final stages of approval from PG&E to move forward with getting our occupancy permit in the city. So as we've been saying, we anticipate launching that in Q4. And again, there's the extract market in California is extremely dynamic. It's evolved a lot over the last 18 months. And that being said, we're going to take a close look at the market before we kind of dive in and commit to our long-term strategy. But in the short term, we've seen extreme downturn in the size of the CO2 vape category in the market. So we're not going to be focusing on CO2 extraction in the beginning. We're more going to be focusing on the production of artisanal high-grade hash rosin, dry sift rosin. And potentially as our vape cartridge volume grows, we will consider both the production of ethanol-based crude and the distillation of crude into distillate, which are all allowed under our Type 6 licensing. So that kind of gives you an overview of kind of the 4 areas that we look to grow revenue and profit over the next several quarters. Obviously, that really lines up with our original business model. So this is nothing revolutionary. This is really just about us staying focused on kind of our core values and principles and abilities, and continuing to deliver on those. And you're really seeing the positive effect of that strategy in our flower sales, which are the predominant driver of our current numbers. And as I'm able to integrate further products, as I mentioned, and further integrated abilities like nursery and extraction, you're going to continue to see that growth in both revenue and bottom line moving forward over the next several quarters. Now, that being said, a lot of people have questions about expansion, because yes, we are at capacity as far as sales. We're at 100% sell through with all of our flower products. So, and we have more demand. We have more demand than to double or triple our current production capacity. So yes, smartly considering a potential expansion is where we're at. Again, we've achieved kind of an operational stability and a foundational kind of watermark for revenue and EBITDA. And that's our low watermark, and we're going to continue to grow that moving forward. So we're not going to do, we're going to be very prudent about any potential expansion. and it's got to fit directly in line again with our core principles and values and capabilities, and so that we can maintain that laser focus. And that's really it. We're not planning. Our plan is to maintain our current operational capacity and grow that within our current infrastructure, and the creation of some of these consumer product goods where I've been able to create supply chains and infrastructure that does not rely on our current infrastructure or labor, has kind of it creates a potential pathway to kind of have exponential growth and scale without having to grow our own internal infrastructure. Anyway, all of those things are moving forward and are on the table. And speaking to expansion, like I said, that really means all of those things equal, that we don't really, we're not in any position, we don't need to do anything rash. We're not going to, and only the perfect opportunity that aligns with everything else that we're doing, it will be in consideration. So that's my update. If there are any, Manita and Matt, if Matt has any closing comments, or Manita, any relevant questions have come up.
I have not seen anybody type any questions at the moment.
Okay. So that's a pretty complete.
Are you able to hear me, Mike?
Oh, now we are.
Sorry, everybody. Technical difficulties. No, Mike, that's a perfect segue. Thank you. So I'll just take a couple minutes here to go over some of the financial metrics that build on some of what Mike's been able to accomplish and what he's hoping to accomplish over the next couple months. So as we said in the release, Mike Jennings and his 50-plus team in Central California were extremely pleased to announce that in each of his last 6 months, Next Greenwave were not only cash flow positive, but also achieved both positive adjusted EBITDA and positive net income. And even though our revenue in Q2 increased substantially to $3.1 million, I'm proud to say our Q3 revenue is well on its way to surpass our Q2 results, as we've already achieved $2.3 million in sales with the entire month of September still remaining. And with that in mind, our operating expenses totaled $1 million in Q1 2020. This decreased to $750,000 in Q2. In Q3, we expect this number to drop further and below $700,000. This focus on increasing revenues while decreasing operating expenses will allow us to report a significantly increased EBITDA in Q3 2020, and it is the company's expectation to have an adjusted EBITDA of over $1 million in Q3 2020. So before I ask some of the common questions investors have been asking to Mike, I just want to hammer home two things Mike has brought up in his update. So with our cultivation facility coming close to reaching capacity, we have been receiving lots of inquiries regarding next steps in terms of financing types, expansion plans. The company is currently evaluating multiple opportunities, including developing its own land in Kalinga. However, we will not be making this decision lightly or quickly, and thus we really have no significant update at this time. And hammering home another thing Mike said was, in regards to revenue projections and new product sales goals, we're not ready to announce expectations regarding our new product sales or our overall 2021 expectations. But that being said, we have disclosed our Q4 2020 revenue projections in Tuesday's release, and we look forward to providing you details of these results of our new brand launches once they've commenced. So, Mike, I wouldn't mind just asking you 2 or 3 questions that have been filtering in here. You are about to come online with vape-related products over the next 30 to 45 days. Can you walk everybody through your thought process there with some of the negative press over the last 12 months related to vaping?
Absolutely. So what we've seen and the research has shown is that outbreak in predominantly the Midwest and East Coast was due to utilization of vitamin E acetate in black market production of vape cartridges. None of those cases ultimately were tied back to the California market or the California legal recreational market. And what we've seen now is a huge rebound in demand after that's filtered out over the last several months in the vape category itself. So just to finalize that point. So we have seen absolutely no evidence of any issues relating to legal vape cartridges produced in California or in any legal market for that matter. And secondly, B, is we've seen a substantial rebound in the size of the vape market as a percentage of the total cannabis market in California over the last several months. So those two things show that both producers and the market are comfortable again with the category, and especially in the legal rec category in California where we are, we've seen now kind of return and surpass the old market levels as kind of we've gotten past that initial scare.
Perfect. And then segueing into the other cultivation operation is, what is your expectations for the nursery in Kalinga, and do you have a time frame of when you might start to see expected revenue from this?
Yes. So as I said, we just ramped up production because we had a successful objective cultivation trial completed. And so what we did in response to that trial was we scaled our labor in the lab, planning for a Q4 launch into the market. Now we don't have exact production maxes, but our goal at this point is to produce and sell roughly 20,000 Botticelli-based plantlets per month. That's and again, we're still working toward scaling the labor and finalizing the numbers on exact production levels, but that is the initial goal we've set based on our thinking at this point.
Perfect. And the last question we have is, can you speak about your expectations for pre-rolls in maybe September or Q4?
Yeah, absolutely. So we've been developing our pre-roll product for some time, and now we've gotten it to market. What we've seen now at this point, we've seen strong demand because they are indoor flower premium high testing pre-rolls. So we've seen strong demand in the category, but I believe that we need another several months to really understand what that category is going to mean for us from a bottom line perspective. As kind of I said in my original comments, I believe it's going to be extremely strong category for us. We are in the premium top of the market segment in that category, just like flower, which is our ultimate bottom line goal for all of our branded products. So we're doing everything right and to our ethos, but as I said, we still need a couple of months to really see what that's going to look like from bottom line perspective.
Perfect. Well, there really isn't any questions filtering in here. So, Mike, if you have no further comments, I think we can actually end the call.
Okay. I just want to thank everyone very much for their support and continued interest in Next Green Wave, and to know that our team has been and will continue to be 100% committed to driving shareholder value, and we're here on the ground working day in and day out to continue to do that.
Perfect. Well, thank you everybody for joining, and we look forward to the next call in a couple months.